All right. Hey there. Good morning, everybody. It is a few minutes after 11 a.m. Central Standard Time here on Friday, the 3rd of December, 2021. Just about 3 weeks left to Christmas if you celebrate it. So hopefully you're getting all that Christmas shopping done because I don't know, man, with this delivery stuff going on and the port's still backed up and all that, you might not be able to get some of the stuff you want to get, right? Hopefully y'all are doing all right. I'm Chris Franks with Texas West Capital, and we're here to kind of look at the markets and see what's going on. Coming at you live from a beautiful yet overcast and somewhat rainy Bernie, Texas. Who's here so far? Hunter's there, Navlusian, Keith, what's going on? Daniel Mendez is here. Crypto Mowgli, Tell You Router, Data, what's going on, guys? Tell You Router saying the good morning traders, the volatility you ordered is finally here. Yeah, so as I warned Discord last night, be careful with any positions they might have open when the NFP was released today, the non-farms payroll report, otherwise known as jobs report, because it was bound to give us some sort of volatility, in either direction, and it did. It went one way and then it went the other, and it's trying to find its way there. A couple of interesting things from that. Obviously, the NFP missed, and they missed by a big margin, but yet the dollar continued to rally, overall. So why is that? We'll talk about that. We'll take a look at what's going on with Bitcoin, still having trouble, not taking off yet. So what's going on there? We'll look at that. Like I said, dollar was still going up though. The indices, man, the stock market, the Dow, the S&P, NASDAQ, man, all taking hits there. Still going lower. I see people still talking about Santa Claus rally. Maybe. It's getting so oversold now. That's a possibility. But, is it going to be to a new all-time high, or is it just going to be a reaction off this continual just pressing down here? So we'll take a look at that as well. By the way, guys, you're running out of time. You've only got a few more days left. We're doing this 40% discount for the 6-month and the 12-month Tier 3 memberships. Why? Because you're not going to learn to trade overnight. You're not going to learn to trade in a month. You need to spend some time practicing and being reminded of those things that you're going to forget at first. And so we're giving you a huge discount off that so that you can concentrate on becoming a better trader, on becoming a good trader. And so take advantage of it while you can, because I'll tell you what, after Sunday, we will no longer ever offer 40% or more off, except for maybe for new members the first month. They might get 40 or 50% off for the first month at some point, maybe. But for everything else, nope, no more. And why? Because unless you're actually in, you may not recognize it, you may not realize it, but we do so much, guys. There's so much content and there's so much education every week. It's not like, hey, you buy it and then you're just kind of stuck out there on your own. We're always updating everything, always giving you new, like I said, 3 times a week for Tier 3, 3 hours a week, Mondays, Wednesdays, and Thursdays, 1 hour a day on there. Wyckoff, Elliott Wave, and rules-based systems. And I taught our Tier 3 members yesterday, or not yesterday, I guess it was Wednesday, a really great technique, one of my favorites, for trading on the 2-minute time frame. And Awesome showed them a version of that for the 1-minute time frame as well, in case, because a lot of times as new traders, the most difficult thing for you is sitting on your hands, is waiting, it's patience. It's very difficult. And so this technique is actually a really successful technique, and it allows you to do a little bit of trading rather than let's say you're trading Bitcoin's just going sideways for days, and then you get bored, and so you end up trying to create a reason to jump in, and most of the time you're going to jump in the wrong direction. And so, to help you with that, stave off that boredom, we've got that technique there. But every Wednesday, we try and show you at least one other different technique. Rules-based system, guys. You don't even have to think about it. If you've never opened a chart in your life, you can start using it right away. Because it tells you exactly what you have to do. It says, listen, if it does this at this point, then you do that. And this is how you, take profit. This is where your stop loss goes. It tells you all that. So anyway, we do that every week. On Wednesdays. Mondays, we talk about Wyckoff. Thursdays, we talk about Elliott Wave. So yesterday, something I do every few months is I do a refresher course on with Elliott Wave on how to figure out where to enter where to enter, where do your stop losses go, stuff like that when you're using Elliott Wave. And so these last 2 days seem to have been really, really big hits with our members. And so if you join, you'll get access to it. You get access to everything we've taught. So that's well over 150, 180 hours of video education, guys. Tell you what, you're just not going to get it better anywhere else. Anyway, we'd love to have you there. You can do it here at howtotradetowin.com. Make sure that you use the the code here, Cyber Week 40% off. Okay? You can do that. Who else is showing up here already? Let's see. Brian Riley, what's up, man? TV Canal is here. Brian Allen is here. Let's see here. Telluride watching that Bitcoin USD channel on the 1 day. Yeah, it's coming back down there, isn't it? Yeah. Let me see here. Well, glad you showed up for a bit, Brian. Andrew Bennett checking in as well. So, anyway, guys, howtotradetowin.com. You can do it there. I'm looking forward to launching the new site. I guess it'll be this weekend, as I told you earlier this week. So that's exciting as well. That'll be at texaswestcapital.com. And we've got a few other things going on that we'll be releasing here over the next week or two as well. So exciting times, guys. Let me see here. Brian says, I'm learning a ton. Just need to learn how to use Discord and Venmo better. Venmo? What's going on with Venmo? That's not part of what we do. But anyway, Discord. Yeah, Discord can take a little bit to get used to. I had never really used it before we started using it for what we do here. So that's always been kind of crazy. Day Rider says, anybody wants to practice Venmo, they can practice Venmoing him. Anyway, guys, so here's what we're looking at. We had this big move over here at the end of last month, right as we come at the end of last month. And then we kind of went sideways and then sideways, and now we broke down this morning. Now the question is, are we going to keep this here as wave 2 being completed down here at the swing low, and then this being a 1-2? And if so, basically what I'm looking at, this is an updated alternate count I gave our Discord members here earlier. And what we're looking at here maybe is you've got wave 1, and then you've got an A, a B, and a C for wave A, and then an A, a B, a C for wave B. So we've got this flat going for wave circle 2, okay? And so that flat says, okay, 1, 2, 3, 4, and we may get, a bounce up, and then pull back down here for 5 maybe. Now, the way we've got this, we had 3 targets set up here if we drop down below this swing low over here. And the first one was the EQ of this blue range right here, which we sat on for a little bit, and then we dropped on through. Okay, that's fine. So we're still kind of around there. Second one is this high volume node here, right around 54, 340 and a half. And then the third one is basically the top of this 1 hour demand structure here at the 1 hour S1 pivot. Now, we have to rally, prior to this wave 2 swing low here. Otherwise, it'll say that, okay, this wave 2 is potentially still in progress and heading lower. And in that case, we'll look at the this 50,914 kind of area, and then this 47,344, 47,434 and a half kind of area, if it breaks down further there. Now, as far as what we're doing here, we do have this volume in this area here dropping off. And then on the breakdown here, we've got a high spike of volume here. So now we want to see, do we get some rallying back up? Do we see more effort and less return here for supply? That's what we're looking for to kind of mark that there may be a bottom in there. Big picture is we're looking for a breakout of this descending resistance here. Excuse me. That's what we're looking for, is a breakdown of this descending resistance. If we can get a breakout of that, that should signal that we're done here and we're headed up. And as long as we do it prior to that wave 2 swing low there, from where we're at, that gives us a wave 3, circle 3 target right here around the R2 pivot on the 1 hour. So right there, probably around 62,860 or so. And that's what we're going to look for. That's what we're going to look for. We're looking for an impulsive rally here back above that 1 hour pivot and the breakout there, and that should get us that. I mean, that's really, where we're at in terms of that, guys. Let me see here. Can we make a channel out of this? Maybe get some kind of pattern target? let's see here. We can do something like this and get us a bit of a pattern target out of here. In that case, a breakout of this descending resistance here, that purple line. This is a pattern target of about $9,157 or so above the point of breakout. Now, what I like about this pattern target actually is usually you're going to have a legitimate pattern target if it ends up right around where the pattern begins, right around where the breakdown begins. So if you have this descending channel here and your pattern target takes you right up to around where it begins, then usually that's a pretty legitimate channel, and if you break out of that channel resistance in that area, then you're likely, it says, okay, yeah, that's probably really the bottom in here. It just gives you some confluence on that bottom. So I like that right there. So we'll see if that happens. There's not a whole lot else we can do with it. There's no magic going on here. It's just a kind of like a wait and see what's going on with price action here to see if we can get that. If this is this count right here, then basically this gives us kind of this ending diagonal here. Let's see. And so here's what I want to talk about with this. Now, if this is correct, then what we're getting here with this strong drop, large candles here, is what you expect. Often you're going to get a throw under, or if the wedge is ascending, you'll get a throw over, and you'll get it on large volume and a breakout, and then in this case it would be a bear trap, and you should see price then rally impulsively back up here to that wave 4 area. So if this count is correct and this is an ending diagonal here, then we should be expected from this area here probably to rally strongly right back up to here. And once it gets up there, then of course continue to do its impulsive rally above and the breakout that area right there. So yeah, that's what we're kind of looking at the moment here. Let me see here. Yeah. So that's what I want to see here. I want to see, do we get this rally up here now? You can see that if we look at the previous candle right here, large candle spread, large volume, and this current candle, already almost half of the previous candle's volume, and we still have 38 minutes left in the hour. But look at that result. Much smaller candle spread trying to flip to positive here. So again, relatively, it looks like we might end up with more effort, less result for supply here, which would signal a bottom and see that rally back up. So that's what I'm looking for right now. Let me kind of catch up with you guys here. Let's see here. Andrew Bennett says support bounce on Bitcoin 2 hour. I don't know. You'd have to let me know where you're looking for that support at. There on the 2 hour. But yeah, I mean, it looks like, again, if I'm doing this generally, if I see this like this, this is what I would expect. I expect large candles, large volume, breakdown below the bottom of the descending wedge there, and then to see it rally right back up, which will take it right back up here above that pivot to kind of say, okay, we got the throw under, which should then, again, get that move up. In terms of this local range right here, it just becomes a spring or a terminal shakeout with the high volume coming into it. Potentially a terminal shakeout and then heading back up there. So yeah, I mean, I'm not hating the price action at the moment. I just want to see that we get that follow through, and we're trying to right now. Look at that. We're higher than where it opened right now with that long demand wick so far. Let me see here. And of course, you can notice on the 1 hour here, we've dipped down into oversold. We're curled on the RSI, curled back up, trying to break out. We've bottomed out here on Stoch RSI, curled back up. So, I mean, it's making a good case. It's making a good case for us. So hold on to your bibbies, right? Oh, no. The video stuff that I use is Vimeo. Vimeo, not Venmo. Yeah. You're not an idiot, man. You're not an idiot. You had me confused with Venmo, though. Yeah, Vimeo. Yeah, that's what we usually use. But Andrew, Telluride still says that you can Venmo him if you want. I just Venmo him a request for money. That's what I would do. but that's how I work. So TV Canal is convinced that the only reason price came down was to fill in a gap. Nothing I can say is going to change that apparently. So that's okay. But just trying to help you guys out here and understand, so that way you don't always expect that type of thing, because it doesn't always happen. And the reason it doesn't always happen is because of what types of gaps it is, or what type of gap it is, what type of gaps it are. But anyway, there you go. So there. Let me see here. Let's see here. 4 hour. We've still got about 2.5 hours on it. 4 hour looks pretty good too. It looks like we're just getting a dip down, again, right into this 4 hour makes it pretty clear. You're just dipping down right into this previous resistance here. So you're going to have a lot of demand in this area, and that's where we're hitting and pulling back up from. So yeah, still looks good on that. Let's see here. Stocks toast yet? Nah, they seem to be. We'll see what happens. You still need to have, further, because you're talking about this large picture, right? So you still need further downside, but right now, yeah. We'll take a look at it here in just a bit. But it looks like we've got those 5 waves down with those. So yeah. Let me see here. What's going on, Spiral Architect? Good to see you checking in. Is it more of a descending wedge over the channel? I think what you're probably, I don't know what you're looking at here. Are you looking at maybe this coming down and then this kind of here? If you want to look at it, yeah, that's fine. I draw the channels because the channels are the actual, what price is moving in. And if there is a wedge, then yes, it will form within that channel. But I don't usually worry about that a whole lot. I just kind of keep the channel on there because it's just, easier to see everything. Because you look here, the importance of the channel is not so much the resistance and support as it is the EQ. And you're seeing, does that EQ make sense? Is it at a significant area of support and resistance? And in this case, it is. You've got a wick down, but it closes back up. You've got it close, wicks down again, closes back on top of it. Wicks up, but really kind of closes around it for the most part, So this is a pretty solid EQ here. And so when you have a pretty solid EQ like that, usually it indicates your channel's good, which means when you break out, it should continue higher. Often people draw poor channels, and it breaks out and comes back in. They go, oh, look, it was just a false breakout. And, and sometimes it happens with me as well, when we're trying to figure out where that channel may be. But what I do, other people keep that channel on there and go, oh, look, and they'll let it keep breaking out and breaking and go, look, oh, it's just a false breakout. Now, the way I feel about it, guys, and what I've learned over the last quarter of a century now of doing this is when you get a breakout of a channel, if it falls back into it, get rid of the channel. That's not the resistance that you're looking for that determines, that's not the turning point. What you're looking for is that resistance that when you break out, price stays above it. Okay? Now, most often, price will break out, come back, retest it, and then continue up. But if you see this thing where price kind of breaks out and falls back in, and then breaks out and falls back in, it's just hovering around that line, just know that that's not what you're looking for. You need a better channel because, like I said, if it is the defining point of the reversal, then you're going to get a breakout and price is going to stay above it, and that's what you're looking for. So, yeah. Diego, what's up, man? Let's see here. Joining this stream, not as late as lately. Glad to have you here, man. Yeah, I saw this cow. It's a little bit different than the one I had first thing this morning and the one we were kind of talking about over in our Discord. But I like this one. It comes out pretty well. Especially with this drop here. So we just need to see, do we get this impulsive rally back up here? That's what I want to see now. Because if we do, that confirms, just based on the price action, it does everything it can to confirm that this is a descending wedge. And if it's a descending wedge, we should expect a reversal off that throw under. It's just that breakdown below that wedge support that should see it, continue right back up through it. As you can see, it's finding initial resistance at that support area. So we want to see that breakout through there and just move up all through this inefficiency here, right back on up to that pivot and continue to break out then. Let's see here. TV Canal, you've been saying bear market for a while now, man. I hope you got other plans in case it isn't. Um, we'll see what happens. I think we've still got further to go. But again, we're coming to the end of the year, so if we do have further to go, it'll be that secondary thing we were talking about, which is potentially end of Q2, maybe beginning of Q3, where we see the market top out. So basically, end of spring, early summer. Now, if we talk about what the Fed was talking about, again, Jerome Powell this week, excuse me. He mentioned, the same thing I talked about Monday. He mentioned or Tuesday, I'm sorry. The likelihood, the gaining likelihood that they may have to taper sooner or finish up tapering sooner. Let me see here. Let me look at my notes here real quick. We have, what's his face? Let's see. What is it here? I think it was Bullard, right? Former New York, I think he's let me see, is that the one it was? I can't find it in my notes now. But I think it was Bullard was saying that they should double taper, which would have it completed by March. I mean, that's a pretty strong taper there. But that would get you that first interest rate hike there. In spring, or like I said, early summer, rather than end of the year type thing of next year, which is what what Powell and them have been saying. Not Bullard, Dudley, that's who it was, Dudley. Let me see here. Yeah. He's the former New York Fed president, and so if you know anything about the Fed and everything, what do we say here? The Fed oversees and manages the liquidity, so the presidents of the New York Fed tend to actually know a lot more about what's going on in terms of bonds and bond market sentiment, money markets, liquidity, than pretty much everybody else. And that's the theme we've been talking about this year, right? We talk about reverse repo and everything. We're talking about money markets and bonds, right? And what's going on with all that in relation to the reverse repo. And so, with him coming out there and saying that they should double that, so that means take it from 15 to 30 billion a month. Again, getting tapering done by March. I mean, that's something that people will probably be listening to, right? If you watch the CME FedWatch tool, let me see here. As far as the March 16th meeting goes, they've now got almost a 27% probability of a first rate hike, which isn't overly significant or anything, but it's a huge jump up from the 18% that they had a week ago. So that's something we got to keep in mind right there. Let me see here. What else can we talk about here? Let me see what you guys got here. Do you have any questions? Let me check. Does what apply to Wix as well there, Hunter? You have to let me know what you're talking about, because I've obviously continued talking. Hey there, Esteban. Good to see you. Matthew checking in. He says, normally Santa run is the sign of an extended bull run. Well, if you look at it, 16 of the last 20 years or so, we've seen basically a Santa Claus rally into the end of the year. So you're talking about basically from about the end of the what's it called? The dot-com bubble till now, right? So 16 of those past 20 years leading into this year have seen a Santa Claus rally, into the end of the year there. So there's a pretty good record of it. But I think things are a bit more different right now than they've been in the past. So yeah, we'll see how this works out with that. Daddy OJ says, I don't think they will be able to taper as much as they want. The market will react heavily. They'll be forced to step in again, kind of been the story of the Fed with artificially stimulated rates. Yeah, but they've got to. They can't not do it. You can't allow the economy to continue running with these high prices. spurred on by, they call it inflation, rise in inflation, right? But basically talking about the rise of cost, right? So the Fed's kind of painted itself. This is what I've been talking about all this year. The Fed was painting itself into this corner where they're damned if they do, they're damned if they don't. They can't afford to allow these higher prices to continue running and continuing getting higher. And so the only way you really kind of stop that is you take away the support. You make it where there's nothing artificially supported, right? So your zombie companies aren't getting all that support anymore. Tapering's getting pulled back, is happening, so that money is lessened coming in. But I mean, if you don't do it, the prices continue to rise. And right now we already see that the prices are still rising higher than the wage hikes that were happening, right? So you're getting higher, you're getting paid more, but comparatively, you're still behind, you're further behind. The prices are rising faster than your pay is. So, I mean, they have to stave it off, right? You say they can't let interest rates rise too quickly. And you say as inflation becomes a concern, then the market will price in the open market. You say to keep interest rates low, they have to buy treasuries in the open market, and they're still doing it. Yeah, they're still doing that, but at much less rates, right? They're still doing that, but at 15 billion less each month, right? So, we're coming down to 90 billion, then we'll come down to 75 billion. I think it's because we were at 100. Well, no, we were at 120, so we'll come down to 105, and then we'll come down to 80, and then we'll come down to 65 and a half. But, what's his name over that former New York Fed pres there, he's talking about you need to go ahead and double it to get that up there. And again, it's you say the market's going to, as inflation becomes a concern, then the market's going to price it in the open market. You say that, but if the Fed continues to manipulate things, it doesn't happen quite that well. It doesn't happen that good. But again, I think they're just at that point where they don't have a lot of control over it, and they never really have. It's always been kind of short term, right? Because the market basically tells you what it wants to do, right? What we see here is nothing more than the result of of the mood, right? Of the market's mood, of how the social mood, right? So it's not that rising indices, create a happier area. It's just that people were already feeling positive. And that's reflected in the buying that goes on, which sends the indices up, right? So, I don't know. That I really think that they're going to end up probably tapering sooner than, finishing their taper sooner than what they wanted. Same thing I've been saying now. The interest rate's going to rise sooner than what I've been than what they initially wanted it to, as I've been saying. But again, it's just because they can't not do it. You can't not do it. Now, when we talk about that, we can look here at what the again, the NFP was released today, and what do we have here? I think they had a 550,000 job expectation, and it only increased 210,000. Now, if you remember last month, we kind of saw that same thing, and then last month was revised up to 500,000. And I think we may see that same thing this year, or this month, because this past month. Because, there's a lot of crazy stuff going on. So if you look at the growth of wages, right? So they were expected 4.8% year over year. 5% year over year. They came in at 4.8. So wage growth was falling short. So again, what I was just talking about, if you've got prices rising and now your wage growth is dropping, you're doing this, man. The Fed can't not take away its tapering or take away its buying. It's got to, because it's continuing to keep things elevated, which is continuing to keep it rising with all the bottlenecks, the supply and the transportation bottlenecks. And so, input costs have gone up, which means end products have gone up in pricing. And you got that idiot in Congress, what's her name? Warren, talking about, hey, Look at this. The companies are bragging about how they can raise prices. No, the companies are saying, listen, we've been able to so far raise prices to cover our cost and everything, and still, make a bit of a profit. But it's not like, oh, we've been able to gouge the little guy out there, which is what she's trying to say. God, this is so bad when you get people like her, which is most people in Congress, and they have no clue what they're talking about. They have no real background, and they say stupid things like that. And then you have, God, it's frustrating because you want the economy to do better overall, and yet all they're doing is making things worse because they don't understand what they're doing. They don't understand the effects of what they're doing or what things really mean on there or what's actually being said, And so, they end up hurting the little people, and then they blame it on everybody else, right? And no, I'm not a Republican. I hate politics. I think both sides are just a bunch of idiots. It's everybody trying to get, what I mean by that is everybody's trying to get whatever they want, which is the way, governments are set up, right? Governments are set up in a way that certain groups of people are going to get things and other groups of people are going to lose things. That's the way it is. But anyway, other things we had going on there, the unemployment rate dropped from 4.6 to 4.2, which is huge, guys, right? That's almost 10% lower. So we've got so this is why it's all kind of weird. We only have supposedly this 210 increase in jobs, right? 210,000 increase in jobs. But we've got this unemployment rate, which dropped down 10% from where it was, right? So from 4.6 to 4.2. The participation rate, which is, those people that are actually actively participating, went from 61.6% to 61.8%. So greater participation, lower unemployment, lower wage growth, and yet a significant miss on the payrolls. That's why I think it's probably going to get revised upwards, just as it was for last month's release when they had it for the October numbers. So yeah, we've got a lot of that going into there, right? I see a lot of pontificating there on the idea of transitory, and Powell said, okay, I think it's time we retire the word transitory. But I see everybody jump on there going, oh, that just to them they read it short-sighted there, and they say, oh, well, that just means that that Powell is saying that the inflation is not transitory, and that isn't what he said. He said there's been this big confusion because people are using that word differently. The way they mean it at the Fed is that what's happening is not going to be a permanent increase on what's going on, right? The inflation isn't going to be permanent. It's transitory. It's temporary. But other people are saying, no, because it's been this significant rise in prices. They're like, oh, look, it's not transitory. Well, that has nothing to do with it, right? It's not the degree of the move. Is it going to be permanent or not? And if it's not going to be permanent, then it's transitory, right? But anyway, see, this is what I mean, guys. You have to think out there. You can't just go, buy off sound bites. You've got to be an active participant in the thinking. You have to be. Let me see here. Hey, what's going on, XRP Bandit? Good to see you checking in. Brian wants to know if there's any chance that XRP will pump before the SEC verdict. Sure, there's a chance. But I don't think, I wouldn't be one to sit out there and go, okay, well, the odds of it pumping before that or after that or this or that. And we just continue to trade the charts, right? So we update them every day there for our members there. And, we just go with that. I mean, right now it seems like it's in a bull run. And when you say pump, what kind of pump do you mean? That's the other thing, Right now, it doesn't look bad. So we'll see. We'll see what goes on with that. Let me see here. Just in time, what's up, man? Let me see here. Brian Riley says, what scenario would stocks have a decent correction, but crypto goes up? Stock market down normally creates a panic of a recession. Well, again, remember, guys, you guys keep looking at this as the crypto market responds to the stock market, and that isn't the way it is. They're both responding to what's going on with the dollar, right? So as the dollar rises, the environment becomes more risk off. And stocks, and especially crypto, are risk on markets, right? So they tend to rise when risk is on, right? But when you take risk off, they tend to dissipate, right? They tend to decline. So I wouldn't look at it as, I would stop worrying about, what's the crypto market doing in relation to the stock market? Because even though they're both risk on, they're two different markets. And even though the stock market has its share of excited new entrants and whatnot with the meme stocks and all that silliness, at the end of the day, I think there's a little bit stronger interest in crypto, which means it could stay risk on a bit longer than what the stock market does. But, there comes a point as the dollar continues to rise where finally your big participants go, you know what? This ain't good anymore. I'm holding on these risk-on assets, and they're losing value. And then when your big players start getting rid of it, that's when you start seeing those big moves come down, right? So we look at the dollar this morning, the DXY, the Dixie here, and you can see that we had this initial drop followed by that rally up. This was after the NFP release this morning. Initial drop and then a rally. Now it's pulling back here, and so we'll have to see what's going on here. Right now, I've still got this as that 1, 2, 1, 2, potentially a 3 here. Let me see. Maybe we've got... it's possible maybe we've got a 1, 2, 3, 4, 5 here. ABC. So it's a 1, 2, 1, 2 here, and then 1, 2. So what we would expect is the demand structure here in this wick on the 1 hour. What we're going to look for is for that to contain price and have it rally up out of that, which may not happen until next week. We've only got a few hours left. Forex traders tend to go home or tend to kind of check out a little bit early on Fridays. That's why you usually notice there's not a lot of price action, around noon or later on Fridays with the Forex markets, FX markets. But yeah, I mean, this might be a 1, 2 here, and then a 1, 2, and then 1, 2, 3, 4, 5 will give us a 1, 2, 3, 4, 5 gives us a 1, 2, 3, 4, 5 kind of thing as it continues up there. Let's see here. Let's say it hits this EQ down here. That would give us 5 waves up right around 96.996. And so that should then be the 3 right here. 1, 2, 3 up there. So let's see here. Right there. And as you can see, that's right around the 2.0, right? So maybe getting something like this. Probably see up here around 97.136. And so that maybe gets you this 1, 2, 3, 4, 5. So then you look at this wave 3 now being up here at this 97.136. Let's see how close that is to what we're looking at here. Does that get you the 2.0? A little bit more, 3.0 up there. So yeah, so if that's correct, if we've got this 1, 2, 1, 2 right here, then wave 3 should ultimately end at least up here at 97.136. At least up there. So 1, 2, 3. And of course, that's just this 1, 2. And so if we're looking at this here, and this is the 1, 2 that begins up here, this 3, so 5's getting close up here. As you can see, that's getting pretty close to this 3 up here, right? At this R2 pivot. So we can see a little bit more of overextension here. We can get this 3, 4, and get this 5 up here like that. So that's what I'm going to look for as this plays out, if we can get a rally up out of this. That's what I'm going to be looking for. So potentially get this. Still working, big picture is this wave circle 3 up here at around the R2 pivot right now in the 1 hour, which is about 97.44. Now, if we break down below this swing low, well, then something's different, right? In that case, I would look at this as probably a 1 and then an A, a B, and then a C as a flat correction, and then going up. But either way, still that wave circle 3 target is still up here around that 97.44 kind of area. And so, that just continues to give this rally here with the DXY. I mean, again, guys, if I'm looking at this, everything else aside, if I'm looking at this right here, we move in sideways between the R1 and the pivot, and we pull back to the pivot and retest it as support, or, test this support successfully and break back out, yeah, we should rally all the way on up here. Should rally through the R pivots. So what we want to see here is we want to see, first of all, does it get above, was this the 30th of November swing high there at 96.642? And then it just needs to get above this one right here at 96.818. So big picture, those are your two targets. You get above that second one, you should be good to go higher at that. But as long as you pull back before and then drop down below here, then things get a little spicy, a little different there. And we'll look for potentially a reversal down here at the S1 pivot. Now at the S1 pivot, obviously, a lot of stuff going on here, right? A lot of support, which found, you've got this base here, which finds support on the previous resistance areas here, right? And then we go over here and you've got all this as well. So if it were to break down, we'd look for the S1 pivot. But if it does break up here, we should head on back up there to 100 plus as it continues to go there. So that's kind of where I'm at with that on the DXY. And if that's rallying up like there, however long that takes, that should have an effect on everything else. Again, because as the dollar rises, again, that makes U.S. debt more expensive to pay, which increases the demand for the dollar. The higher value of it, the higher interest rates. Usually it goes hand in hand with higher interest rates. We're already looking at that with what Powell said, with potentially speeding up taper and getting the interest rate maybe in sooner, interest rate hike. And so, it makes the currency, the dollar here in this case, more valuable, which gives it greater demand. It kind of feeds on itself, right? And so as people go into that, they get out of the other stuff, right? So, yeah. Let's see here. What would be a high confidence entry on Bitcoin right now? So here's what Telluride was talking about earlier. This is the same thing we've been looking at for a few months now. We've got this nice ascending, channel here. We've got the touch at the top, bottom. Here we come touching it again. Now, often when you get this, it's like this right here, right? When you get the touch, rally, touch, usually it's going to give you a strong move like this right here. And if we think about it, that's what we're looking at here, right? You get this breakout back up through here. I told you it should rally impulsively up through that purple line. That's going to be your entry, guys. If you're looking for a higher confidence trade. Now, when it does that, again, it could pull back. So if you buy the breakout, it could pull back and drop below your entry a bit to retest or to test this resistance as support. So just make sure you're not using these large position sizes, right? That you're using proper risk management, and then you'll be fine. But ultimately, it should, if it's breaking out impulsively back up above this 1 hour, 4 hour pivot here, taking it above the wedge resistance, above this channel resistance, that should be all she wrote, and we should see something similar to what we see here, this big breakout here. Because when you're looking at a channel like this and you get this double tap right here on support, close by, after it's hit resistance there and it comes all the way down to support, rallies up, pulls back to support again, that's usually the clue that it's going to take off like this. And so we see it here, and I would expect to see it here as well as it's going there. So if it does that, again, that gives us, we've got this kind of descending channel here. That's that same purple line I was talking about right here. You can notice that on this large descending channel here, look at that EQ. Remember, I told you it's all about the EQ. Look at that. Resistance, 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 right? You break out through that resistance, you should have a target of the descending channel resistance. You break out of that, you've got a pattern target of 13,735 above the point of breakout. So that's going to get us up there around that 78, 79,000 target area on the breakout of that pattern target wise. So yeah, that's what we're going to look for if we can get that breakout and go with it there. Now, it's not guaranteed that it's going to happen, but if it does, that's exactly what we're going to look for. Okay? Let me see here. But the question was, what scenario would stocks have a decent correction, but crypto goes up, stock market down normally? Okay, yeah, so I answered that with the whole idea of it. It's not that crypto and stocks are, the crypto's moving because of stocks. It's because they're both moving in relation to the dollar. And it depends on the market's participants as to whether they're going to remain, how long they remain long in that market as the dollar rises. Like I said, with Bitcoin, it seems like people want to hold longer. It seems that they got these more crazier thoughts about higher price, about really significant higher prices and whatnot. And then we've got stuff that's locked up, in Ethereum and stuff like that. So, that's going to cause there to be a longer potential ride on it, on the long side of it, than what you might have on your stocks. That would be why. Let me see here. Michael Otis, what's up, man? He says, is Bitcoin becoming more correlated to stock market with Coinbase and Bitto, or is it the other way around? Okay, yeah, like I said, there you go. Again, still an answer to that. But in general, see, here's the thing you have to remember, guys. Generally, if Bitcoin is rising, then those Bitcoin-related stocks like Coinbase and Bitto and whatnot should rise, right? But here's the thing. It's not that it's going to bring the stock market in line with crypto or anything like that, because these are crypto-specific stocks, right? When you think of those, you think of Riot blockchain, you think of, I can't ever, every time I want to say it, I can't remember what it's called. Starts with an M. Marathon. Patent. They're stock related, or they're Bitcoin related, but they're still stock. So see, now they've got like a double whammy there, because the stock itself, first of all, gets a lot of its power, right, from whether Bitcoin rises or whatnot, or other cryptocurrencies rise. But if the overall stock market sentiment is down, then that's going to cause people. Remember, these people that are buying into this, into stocks related to crypto, often are fearful of buying into crypto. They're using it as a proxy, right? And so what it means is that they're still very stock oriented, not very crypto oriented. And that's why they're using, the stocks to get exposure to crypto without actually having to buy crypto. And so what that means is their mentality is still very much stock related. So if the stock market is feeling dumpy, they're going to feel dumpy in general. And so there's going to be that back and forth when it comes to that stock price of crypto-related stocks, when you're kind of looking at that. Let me see here. Daniel, you think it's going to be interesting to see how the public responds and politicians respond, especially with the admin in power now who's sat on socialist policies? Guys, let's face it. Government itself, it tends to be socialistic in nature. It's always, and the longer, that they're in power, the more it tends to lean that way. People, especially if people vote and it's not like some rigged elections or whatever, people are going to, again, I don't think that people in general are evil, in general. Sometimes people have a chemical imbalance in their brain, traumatic, things that happen, and then they do things to hurt other people. But most people are not trying to hurt other people. They're just trying to make lives easier for themselves, and they're lazy. And so when it comes to voting, they're going to vote for them. They're going to vote for what can I get for free. And so governments tend to go that way. So I don't think there's any big special thing with old Joe Blow on there now. It's just a continuation of the same old. I'm more concerned about people like AOE and Bernie Sanders and them, and then the people who are very supportive of them, because they don't see beyond that what can be done for me kind of thing. A lot of them tend to have this attitude, well, we've been screwed so much by the other side that where it doesn't matter if we screw them. And it's not that they necessarily want to hurt, but it's just that, well, you know what, who cares? They screwed us, so it's their turn now. But it's all in response to just getting for them. But even with that, guys, what is the government going to do? At the end of the day, the public itself is really what drives everything. And so no matter what the government does, if the people themselves feel a certain way, then it's not going to have a whole lot of If they feel the opposite way, it's not going to have a whole bunch of positive impact on those people, right, or on that market. Hope that makes sense. I don't think that governments and central banks wield all the power that people seem to think they do. They're always reactionary, right? And if you're reactionary, that means, you're just doing what you think at the time, but you're not really understanding where the market, the people, the mood is at that point, because you're coming in late. So I don't know. When I'm looking at that's what I see with that. Yeah. Hunter, you were asking about when I said if the price moves out of the channel and then comes back in and whatever like that. Can we have wicks moving in and out and call the channel valid, or does price need to close out of it then move back? Yeah, so yeah, if price breaks out at all and comes back into it, unless you're using an Elliott wave channel. Now, Elliott wave channels are different. You've got your wave 2 channel, your corrective channel, stuff like that, and price moves differently, okay? But we're talking about just general patterns like this particular general channel here. This isn't an Elliott wave channel, it's just a general channel, which defines kind of this overall movement from up here. So if it was to just wick out above it and come back in, I would just be done with it. My expectation is if price breaks out, it needs to stay out, or breaks down, it needs to stay down. If it does anything different, then you're saying, okay, well, that channel isn't really all that valid. And the more it does it, the less valid it is. At least in terms, it's not that the channel is invalid in that it's not defining the movement coming down, but it's what I'm looking for when I draw a channel is I'm looking for that channel resistance or channel support to be the definitive resistance or support right there. In other words, when price breaks through it, I expect price to continue going with it. It's that line that says, we're done going the other way, we've reversed. And that's what I'm looking for with channels, which is why I then get rid of those that do that, unless, of course, like I said, looking at an Elliott wave channel, which tends to have a lot of that back and forth and up and through it, but that's done a different way. So, yeah. King Crypto, what's up, man? What are your thoughts on YouTube taking away our ability to see downvotes on videos? As somebody who does this and who has been through that, where you get people that go on there and they just do a whole bunch of downvotes, I'm going to be honest with you. It's hard enough getting viewed, getting seen on something like YouTube and whatever. And those kind of things make it a lot more difficult when people do that just out of being real mean and whatnot, just out of hatefulness or out of trying to hurt your channel, for whatever reason. So I think the downvote thing, I think that helps them out that way, and that it keeps that kind of stuff from happening. It's a lot more prevalent than you guys may realize. Again, I've been through that. I had one point here, I think you guys may remember, we had something like 50 or 75 downvotes. And 3 days later, YouTube cleared that out, but that still affected everything. And like I said, as a small channel, it's really difficult to get any traction. And, it doesn't matter how good your content is if you can't get that traction, right? You could be giving the secrets of the world away, but if nobody knows, nobody knows. And you can't get known, if you got that kind of negative thing happening. So, at the end of the day, I've given up worrying about it a whole lot. I've got a channel that's specific. It hits a certain niche. Most traders don't want to listen to it because it takes a little time. What they don't recognize is all the legitimate, really important education that you get for trading that comes out here, even on these public live streams. The things that I talk about, when it comes to trading psychology and emotion and things like that. Forget just what I'm talking about here. Physically, we can see there on the charts. But when I'm talking about these mistakes that new traders make and things you need to pay attention to and how you trade it more effectively and whatnot, I'm telling you guys, if you're around for any length of time, you'll recognize that these are the things that really make the difference, that these are the real things. But most traders, that are in the market today, right now, they came in because of meme stocks and because of crypto blowing up. But they don't really want to be traders. They just want it handed to them. They want to go in and buy and just have it magically rise 100 times for them. And so they're looking for sound bites. They're looking for 5-second sound bites. They're looking for somebody to tell them when to buy and sell. And they'll never be successful. They'll always lose all their money and more usually. Usually they'll put more in. But, nothing I could say here is going to convince people of that. So, I mean, for me personally, I don't get a lot of traction with my channel as it is, so I don't really worry about it. But I think just with what I was through with that previously, I think the trade-off is more beneficial to honest channels than it is hurtful to everybody overall. And that's just, like I said, unfortunately, it's just the sad nature of what's going on with people and how they, and how they treat, people that are out there doing this kind of thing. That's all. It's a difficult situation all around. But, the YouTube, the algorithms and whatnot with the YouTube and all these other things use, part of that they take into consideration are those downvotes and those upvotes and stuff like that. I mean, if you've got a channel that's heavily downvoted, it's gonna hamper your ability to get up in there. And so if somebody's doing it just to be a jerk, as they do, you end up harming the little person there. So yeah, that's what I'm thinking about it. Let's see here. Let me see here. But yeah. So I mean, that's just kind of what I've noticed and doing it there. Again, I've given up a long time ago trying to make this channel huge. I don't give the market what they want, and that's why I mean, we have. I was just looking the other day. I think we've got just over 300 members now with TWC, which is great. It's great, but it's nowhere near the thousands of members that these other flash in the pan kind of things have out there. Because they do the same thing. They just tell people what they want to hear. They try and do that, and all they care about is getting that money from them. And the people that are paying them don't realize that. They don't recognize it. And they go in there and they lose all their money, and then they're out of the market, and then it's everybody else's fault but their own. But at the end of the day, it is your fault. If you're going in for somebody just to tell you, if you think that you're going to make great money off paying somebody $100 a month to tell you when to enter and exit trades, it's just silly. It's silliness. Because if somebody could do that to the degree of which you expect to happen, they're going to charge you a hell of a lot more than $100 a month. They're going to pick specific trades which are all but guaranteed to go in the direction they're talking about, and it's going to be a lot less than what you want, what you think. It might be just a couple of trades a month, a few trades a month. But your odds are going to be greatly increased that you're going to be successful on it. But you're going to have to pay for that. You're going to have to pay thousands of dollars a month for something like that. I mean, this again, this is why I focus. Yes, we have, chart requests and trade setups, and many of them tend to do really well. But even those are more along the lines of, listen, here's the structure. If we're breaking out through here, then this is what we're looking for. If it breaks down here, then that's where we're going to go, It's not like, hey, you need to buy at X and sell at Y. It says if it breaks out here, then, the pattern target is this. The Elliott wave target is this. But you still have to go in there and manage your trade. You still have to make sure that you're entering with proper risk management, which, again, is all included in Tier 3, Gosh, even Tier 2 has those risk management videos. But, the big thing of what we do is to help you learn how to trade so that way you don't have to worry about somebody, are they really, is what they're doing really make any sense? I pay a lot of money every year, guys. I go and look at a lot of these different guys out there because I'm always trying to figure out how can I do what we do better. And I look at a lot of them out there, and sadly, most of the money I spend thousands and thousands and thousands of dollars a year, probably well over $10,000 a year on these different competitors, I guess you could say. Most of them, especially if they're offering these services where they tell you where to buy and sell, most people end up really bad off. Even if generally the ideas are okay, as a new trader, your inability to understand how to properly play that, what size position to use, where to put your stop loss, take profit, stuff like that, it'll make you lose money on it. So that's why we spend so much time talking about all this stuff, so much time on education. We're an educational service that happens to offer the other thing. Most people out there are just trying to be that other thing. But it goes to hell in a handbasket. They'll often get rid of their. I've noticed that they'll often get rid of trade calls and whatever that didn't work out, and then they'll end up fudging their numbers. They say, "Oh yeah, we've got this 80-somewhat% win rate," and they didn't really. Everything we do, it stays in Discord, guys. You'll see things from years back, whether right, wrong, or otherwise. It's always in there. Because I'm not here to guarantee you that price is going to do A, B, or C. I'm here to get you to understand how to look at the market and then use the proper techniques to enter or exit the trades, so that way you are a competent trader. Your account is growing over time, not trying to hit it out of the park every single time, because that's not going to happen. That's not real life, guys. But again, because I do it that way, our membership is a lot lower than what most of the other services are. But with that in mind, our membership tends to stick around for years at a time. And they don't. The other ones get a lot of churn. A lot of new people come in, disenchanted after a while because of exactly what I talked about. They leave. So, yeah. I say I'm an anarcho-capitalist. Yeah, I mean, if I had to give a label, that would probably be the closest to what I am. Basically, what that means is just leave me the hell alone. I'm a firm believer in being allowed to do what you want to do, as long as you aren't hurting the person next to you. Now, some people have gone beyond that and they say, "Oh, well, it inadvertently hurts this person or that person, indirectly or whatever," and they try to come up with all this mental gymnastics, as far as how it hurts somebody else. But again, my basic understanding about life and things is, you control what you're going to do. Yes, there's going to be people out there who are raised in a situation where they don't understand that. But we can't change that. If they're in that situation, even if you give them the tools to get out of that situation, learn that they can control what they do, they choose not to. So we can't use that as some reason why we can't do things, because all you're doing is harming the people who are creating, who are making things better, who are adding to society, and you're taking away from all that, which means society in general tends to lose out. And it's hard for people to understand, and a lot of people end up taking offense to that, especially if they're very, very liberal or very progressive. And I don't mean it to be hateful or harmful or anything. I just mean that when you really think about it, there's these things that come up. And so as an anarcho-capitalist, the idea is that government needs to get the heck out of business for the most part, right? If we allow the market to regulate itself, it generally does pretty good. Yeah, there's going to be things that get through. And see, that's always the thing that everybody else wants to argue is, oh, but if we do that, then what if this happens or what if that happens? Well, it's like trading. It's not always perfect, right? You're going to get in and out. You're going to have bad draws. It happens. But in general, overall, it's going to be a lot better. We're by governments, any governments, we're forced, we're told to believe that what we're doing or what government is doing is the best thing for the people. But if we look historically, it's often not, right? And I don't know. I think that if you allow people to make mistakes and to learn from their mistakes, everybody is a lot better off. When you start subsidizing risk, which is what government does, right? It starts manipulating risk. Well, when you do that, then you really don't understand when you make a mistake. And to me, that ends up harming people overall. So, yeah. Anyway, that's what we're kind of looking at there. Let me see here. Kind of catching what you guys are up to. What is happening? What's up, man? It says nibbling this dip. Yeah, we're still waiting for this breakout here. We're finding some resistance right here, but if we can break out, we should move up through this. This is an inefficiency here. These large candle spreads, guys, in trading terms is what we call inefficiencies, because there's no real testing of levels along there. So there's not a lot of, once you get this down, if you're moving back up, there's not a lot of supply to get in the way here. And so price should rally pretty well and easily through that inefficiency right there. So yeah, if we can get a good breakout back into this wedge, we should have a pretty easy move back up there, which is what I'm looking for on that. Let me see here. Let me kind of catch up with you guys a little bit. Oh gosh, I'm going to go down here, back to the bottom here. The government acts as custodial parents, more or less. Yeah, yeah. Let's see here. Let me see here. Matthew, what's up, man? He says, just sent over a very interesting idea on Twitter looking at the Bitcoin flat versus total crypto market cap correction. TV Canal, what if we lose 53? Go back to what I said at the beginning. I gave you those targets to the downside if we lose that area. Let me see here. Where did you send it to me? On Twitter? I don't see it. I don't see me tagged anywhere on that, Matthew Bolts. You have to let me know. From Crypto Cappin? Yeah, I don't see it anywhere on here, man. Am I missing something? Maybe mentions. Let me look over here. Nope. Not showing up yet. If you did, tag me in something. Asim Risk, what's up, man? Government does a very poor job of prioritizing goods. Exactly. And because they are always reactionary, and they're reactionary in a much bigger thing, right? So the problem in general with government, guys, especially in an area like the United States, which is so large, is that you got these guys over in D.C., which is this one small area, right, telling everybody in Maine to Washington and Alaska to California to Texas to Florida what they should do, right? And even in, Iowa and whatnot. And they're sitting there trying to tell you what to do, but every area is different. That's why smaller, more local, if you have to have some kind of governing body, it's always better. That was the state's big argument before, when they were putting together this whole constitution, setting up this federal government. That's why a lot of what was going on there was meant to retain power within the states. Because Texas, for instance, knows a lot better what to do, what its people need than what D.C. does. And D.C. is going to do this thing that kind of is half-assed, right? They kind of just does a little bit for most of the people, right? But it's also extremely harmful to some people. And they're like, oh, well, consequences of doing it is what it is, And so that's a big problem with government in general when you have larger federal government types, because they're so far removed from those local areas. So your city level knows what the city needs at a much greater understanding, right, than the state does. And the state knows what the state needs to a much greater understanding than the federal government does, right? And so that's where you get a lot of the issues with government coming in there. And again, it's not that always the people tend to use government just to hurt other people, but, again, most of it's just about trying to use the government to get what they want, right? And so you get what you want, and, you're lazy, and you want the easiest way to do it, and other excuses are, oh, well, this other side of the aisle that I'm not a party of, did this to us for so long, so now we can do it to them, But none of that helps, guys. None of that helps people in general. It makes life difficult for a lot of people. Because what you do is you end up either creating loopholes that the very rich or whatever can then use which ends up harming the lower group, the other side of that, right? The poor, for instance, or the middle class or whatever. Or if the loopholes aren't there, they move. And then you lose all of that they had for being there, guys. It's not like, oh, just let them keep their money just to let them keep their money or whatever. But, it's a lot with that, guys. There's a lot, it's a lot more intricate. But it generally, again, it comes down to the whole idea that the closer your governing body, if you're going to have one, is to the people in that area, the more effective it can be. Necessarily, the further away it is, the less effective it will be. And actually will be quite harmful. So yeah, and so that all works out into the markets, because again, remember, those in the markets are these made up of these people from all over, kind of putting their input in there, right? So yeah. Let me see here. Life of Rhyme. If you just got here, go ahead and reverse pull back into the stream and you'll see exactly what I talked about I was going to do. Don't want to repeat myself consistently through the stream. Daddy OJ says, I've been in a few groups and TWC is by far my favorite, especially if you're a new trader. A lot to learn if you're willing to put in the work and learn. Hey, I appreciate that, man. That's exactly what it's all about. If you come in and you really want to learn, you're going to learn here. Period, end of sentence, and I'll do everything I can to help you. Obviously within reason, right? And we've got a lot of people that, back me up on and say, yeah, that's what we've done. But if you just want to come in and you're just looking for somebody to kind of tell you where to enter and exit, then don't waste your money. It'll be a waste of money with us because you don't have the right mindset to trade for the reasons I explained earlier. And again, it's not a put down or whatever. It's just this reality that if you're going to be a trader, I think it really requires a few things. It requires that, one, you believe you can change your future. You believe that you have complete control over what's going on in your life. Okay, that's the one thing. The second thing is you have to have a desire to learn and to want to get better. I think if you lack either one of those things, your foray into trading is going to be very miserable. You're not going to like it at all. And which is really sad because, guys, I've been doing this so long and it's such an enjoyable thing. It gives you so much freedom in terms of time and money, right? And especially time. You can't get any time back, guys. Like I continue to tell you, on their deathbed, nobody's sitting there going, man, I wish I had, sat on those charts for another, 2 hours trading. They don't want to do that. People are going to be like, man, what was I able to do? What kind of memories do I have before I pass? Or what kind of memories have I left for the people that I love? Right? And so that's what it's all about, guys. Hey, Mike, good to see you checking in, bud. Wouldn't be a Texas, Asymir says, wouldn't be a Texas West stream without a truth bomb or two regarding wishful traders. And again, some people are going to get on that and they're going to take it personally. I can't do anything about that. But it's, if it helps, just know that I don't intend it to be a personal attack or anything. I intend it to be a reality check. I'm not going to sit here and blow smoke up your rear end, right? I mean, that's what everybody else does. It doesn't benefit you in any way. You go in with these great, pie in the sky thoughts and these ridiculous thoughts that you have that we all have when we first start trading, right? But they're perpetuated and seem to be truth because you got these other people out there who are telling you, yeah, you're right. And all they're trying to do is get your money. And then you get in there and then you're, distraught and, you're upset about it and everybody stole your money, right? But really, at the end of the day, it was you. You shouldn't have been trying to get into something like that. Again, it goes back to the whole idea of being lazy, right? Just people in general, we tend to be lazy. That includes me. I'm a human being. I try to work on it not to be, but we do. We try to do things that make life easier, that take the pain away, that, less effort, right? But those usually don't end up very well. So, yeah. Let me see here. Let me kind of catching up with you guys here. Ali, what's going on? He says, why do we have these sudden sell-offs in Bitcoin these last few weeks? Is it because the DXY rising? Well, I mean, in general, your risk on markets are going to, take a hit when the dollar, of course, rises, because again, as the dollar rises, that signals risk off. And Bitcoin is a risk on market. People invest when they're not so concerned about the risk, right? But as the dollar rallies, the risk becomes greater, and so then people tend to not. But I mean, at the end of the day, it's really just people playing out people, right? It's the market. So yeah, so people get fearful for whatever reasons, and they kind of sell off, and then you get to the point where there's more greed than fearfulness, and price tends to go back up. Yeah, I mean, just put it, just to put it in a general way. Yeah, what we're looking at there. Daddy-O says, some people think when things come off the cliff that money will collapse on either the dollar or Bitcoin. I think it will be Bitcoin. Some think the dollar, and the dollar could be in a short period of time. But all fiat currencies will eventually reach their intrinsic value, which is zero. So that's what I bet on long term. Yeah, I don't think we're anywhere near hyperinflation. Again, that seems to be the big thing. Everybody's talking. There's been this romanization of the decline of the dollar, of the death of the dollar since the 70s, guys. Okay? Since we got off the gold standard. And if you've been around in trading long enough, or in macroeconomics, those kind of thing, you've seen it. There's this romanticism about it, but that's exactly what it is. There's nothing going on at the moment that says, oh my gosh, we should be heading this way or that way. Everybody's like, oh look, 40% of the money in circulation was printed in the last year. Well, so what? It doesn't. What's printed doesn't mean a thing unless all those dollars are chasing the same prices, right? The same objects, right? If they're not chasing them, guess what? They're not. It does. Prices don't rise just because there's more money. Okay. So everything else aside, let's say we don't have the bottlenecks, supply bottlenecks, the production bottlenecks, all these things, right? And let's say prices are only governed by money, right? Well, just printing money, even if the Fed could just print it and send it out to you, which it can't do legally, it has to go through the banks. Again, real monetary creation comes at the bank level, right? Legally, it has to. But, okay, if all that money, even if all it comes to you, if you're not using that money, if you take all the money to stick it in the bank and you don't use it to buy all these new things, guess what? There's no impact of that money on prices. There's no inflationary impact on prices because you have the same amount of dollars chasing the same goods, right? Worse yet, if you take that money and you pay off debt that you have, instead of just sticking it in the bank, you use some of it to pay off the debt, guess what? Now you're looking disinflationary and potentially deflationary. Because you're destroying dollars. The same way in which dollars are created at the bank level, they are destroyed at the bank level when you pay off your debt. So if you have money and you're sticking some in the bank and some to pay off debt, well, now it's not only no real positive inflationary effect, a rise in prices on objects, on things, but it's potentially deflationary on those prices. Because there's actually less dollars in circulation chasing after those goods. And this is where most people don't go on. They don't think beyond the noses right there on their face, right? They think, oh, the Fed's printing money, money printer goes burr, so now that means everything's going to be higher. And they have no clue of how money actually enters the market. Right? And what it means that even if it enters this broader money supply, it doesn't necessarily mean prices are going to rise if you don't have this aggregate amount of money still chasing those limited products. Now, obviously, some money, if they were to do that, if the Fed could do that and send it directly to you, some people would spend it. Right? So they're going to have some effect on it because some people are generally going to spend it. But, I'm trying to get you to understand that unless that money is still actively chasing those limited goods, there's no inflationary price mechanism going on. And then so then the backup comment is, oh, but man, it's just sitting, it's kindling, it's tinder, it's just sitting there waiting to go. Well, we can talk about things just sitting there waiting to go for the rest of your life. Until they're actually doing it, doesn't mean a dang thing. And guess what? If that happens, and then the economy takes a downturn and starts dropping off, well, guess what? You're going to have negative effects on your prices there. Negative effects meaning lower prices. Potentially deflationary is the fact that I talked about those year-over-year wage, it decreased, right? It didn't get to where they wanted for. And so that is a deflationary effect, right? Less money going out to the people, right? Less people getting paid less. And you get that with your greater competition because we saw that the participation rate was up, the unemployment rate was down. So you've got more people competing for the jobs that are out there. So the companies don't have to pay as much, right? Because you have more competition for that thing, right? So people are going to be willing to take less. So a deflationary effect. A lot of things going on there that most people don't think about, guys. Okay? Yeah, I don't think Bitcoin is, again, Bitcoin is a risk-on asset. I don't think it's anywhere near safe haven asset at all. I know people want to talk about it and say, oh, yeah. It's not. It's way too volatile, guys. You can't have volatility like that and call it a safe haven asset. Because the idea is that you move from something that's decreasing your value of your money to something that holds that value, right? And if there's, you say, oh, but over time it continues going up. And I say, well, guess what? It's only been in a secular bull market. We've never seen it in a recession or a depression. So shut your mouth, right? I mean, think about it, honestly. If Bitcoin is, if your argument is that Bitcoin deserves reserve status, whatever, and it's going to be a safe haven asset, it is a safe haven asset, because even though it's had these large swings over the years, it always continues to go up. Well, again, the counter argument to that is it's only been around in a secular bull market. We don't know what's going to happen to it if there's a recession and or especially if there's a depression. We don't know. And I don't care. And I'm bullish on Bitcoin. I like Bitcoin. You guys know that, right? But I'm not an idiot. I'm not going to sit there and blow smoke up my own rear end, trying to lie to myself about something that we don't know about. But that's where a lot of new people coming in, they set a mental block to that. They don't want to think about that. Because that, they, again, as I mentioned earlier, they come in, they want to buy in and they want price to magically rise 100 times, and so that they can do it. They're not really interested in learning to invest or trade properly. And so they don't want to listen to anything that says anything opposite of their money's going to make 100 times or 1,000 times. They don't want to listen to anything other than Bitcoin's going to $1 million or $10 million or whatever. They don't want to listen to anything else. They refuse to. It's unfortunate, right? So yeah. Just kind of some thoughts on all that there. I'm just trying to catch up with you guys here. You guys are making great comments here, man. I appreciate this today. Let's see here. Oh, let me catch here. Asomir says, I think the terms inflation and hyperinflation distracts from a substantive conversation regarding purchasing power. Yeah, exactly. Sorry, give me a minute here. Talking a lot. Mouth is dry. Oh yeah, most people's, almost everybody's problem with Bitcoin is poor position sizing. Yeah, exactly. Everybody trying to go in with everything they have and just hope it goes up the minute they get in, or goes down the minute they short or something. Yeah, there's no real understanding of position sizing and whatnot. Yeah. Trying to be the poor man's HTL. And yeah, so, man, crazy stuff, right? Ricky Bobby, what's up, man? Still love that name. I like that movie. How much of a lid could rising dollar place on the likelihood of new all-time highs for Bitcoin through Q2? Like I said, I think Bitcoin's got a chance to still continue to rise up through there. As long as the dollar is just rising kind of steadily, I don't think, I think Bitcoin can still stave off the pressures, the sell pressures. But I think if we get a sudden, strong, impulsive, jarring move up, I think that's going to have definitely a negative effect on new all-time highs for Bitcoin. Overall, I still think Bitcoin's potentially got higher here. We haven't done anything yet that should have anybody thinking, oh God, we're definitely at the top. Again, if we just kind of remove everything here and just look at structure, all we are is right here, which is just on top of this right here, which is just on top of this right here, right? So there's a lot of levels of support in here that price actually has to get through before you go, okay, well, maybe the top's in. Now, you can say right now, oh, the top's in, and maybe it'll go down, maybe it'll be in, but there's nothing here going on here that says that there's some kind of special thing you've got going on that makes your idea that it's the top something spectacular. It's just a guess, basically, is what I'm trying to say. You need more technical movement to the downside through these areas to kind of say, okay, maybe the top might be in. Right now, it's just a simple short pullback right into areas of support, of which They're stacked up here, guys, since January of this year, this whole year. Here, 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 here. I mean, it's all stacked up here. And so if we look at this, I mean, look at that. A wide area of a high volume node here. That's a lot of stacked demand all in this area here. I say stacked demand because we're above it. So if you're above a high volume node, then the market tends to use that, that node tends to be support. If you're below it, it tends to be resistance, right? So, this is a very wide base here. With a dip here, a dip over here, and then your top's right around there, which this had this pullback to that, and it moves up and it's coming down. All we're doing is retesting this previous area of resistance. So, again, you play it as it works out, and you don't try to make any really large decisions from what's going on at the moment, because anything you say right here is bound to be emotional. Because we're coming off this move up here, right? And we're down here. And it's like, oh my God, it's never going to stop dropping, right? It's been dropping for almost a month now. But that's where people tend to make their decisions about how well Bitcoin is or is not going to do. And what does it do for them? It doesn't help them at all, right? Let me see here. Daniel Mendez, what's up? Oh, you bought the 6 months with us? Fantastic, man. Hey, listen, don't forget to go into your account on the website. And on the top left-hand corner, it says update your Discord screen name or something like a username. Click on that. Put in your username with the 4-digit descriptor, and which you can get just by going into Discord, and your little name's down there at the bottom left-hand corner. Just click on that. It'll say copied. Just paste that in there. And then that way the bot will update your access to Discord. Yeah, so just make sure you do that, okay? Why would you not respect your money? Exactly. You have to do something for it, guys. I'm a firm believer in respecting your money, guys. Whether it's time and or effort, you've had to exchange something, no matter what you're doing. Whether you're sitting in an office making $500,000 a year or you're mowing lawns for $15 an hour, you're working for your money. You have to respect it. I don't understand people who just throw it as if it's nothing. And that's been something that's been with me a very long time in my life, is that understanding. If you don't respect your money, then how can you expect to make more of it to any significant degree that you want, right? Yeah. Oh, Daniel, you did great, man. Great. Good to know. Let's see here. In Life, what's up? Is it fair to say, without position sizing and disciplined trade management, one should not trade crypto? One shouldn't trade at all. Yeah, very fair to say. The most important thing you're going to do is risk management, guys. It is absolutely where you make your money as a trader. And yet it's the boring thing to do, right? It's not the flashy thing. It's not the, hey, I bought it here and sold it here, right? And that's why most people don't do it. Well, so one is they don't really understand that it's that important. But two is, even when they do, they don't do it because it's not what they want to do. A lot of people are just out for clout. They just want to say, oh, I bought this and sold it here. And, and I caught the very lowest price and sold the very highest price. And that's why those people don't stick around. Your traders, your good ones, they're not hitting home runs every day. They're consistently getting on base. It's just like baseball, guys. You want to know how you make a lot of money in baseball as a baseball player? Get on base consistently. Hit runs in consistently. Baseball teams will pay out of their rear end for you. More than they'll pay for somebody that hits a home run. Because they need consistency. Consistency is what wins. In all sports. In anything you do. Consistency is what wins out. All right? Let me see here. I'm going to catch up with you guys here. Hey, Tail. Good to see you checking in, man. Let's see here. Michael says some people don't respect their work or get paid for something they think is too easy, so they don't respect the money they make. I will agree with that. Yeah. I will agree with that. Let me see here. So let's go ahead and jump over here real quick. What's going on with the other markets here? Whoops. Wrong chart there. Trying to get to, where are we at here? Let's take a look right here at what's going on with the, what's it called? NASDAQ composite here. So look at that. Big breakdown coming in. I think we're still on wave parentheses 3 here, coming down. We've got this. If we come off here, I've got this 5 way up here. So we're down off that all-time high here. We've been down almost 8% off that all-time high over the course of about 11 days. So pretty big move down, right? So almost a percent a day, 0.75% a day. But it looks to me like we've got 1, 2, 3, 4, 5 down here for 1, 2. Now there is an argument to be made for maybe we've got a 1, 2, 3, 4, 5 here, so it's an A, B, C. There is that possibility. If we can get this to break down further, though, that would suggest that we've probably much more likely that the top may be in. So don't take it for granted that that we're definitely headed down. I think we're leaning that way. Again, look at the 15-minute. We just got this little bit of movement up. 15-minute Stochastic RSI getting to overbought. 1 hour is kind of low down here, but man, you know what changes us here a little bit? So we've got this nice reset here in Stochastic RSI, but RSI really is just kind of doing this sideways thing right here. And you got to be careful with that because a lot of times that means it's going to head down further instead of heading back up. So you have to watch that. Your 4 hour, again, hasn't reset down and oversold yet. As a matter of fact, it's still pretty high up there at about 33.5. At 30 is that breakdown into oversold. So again, still room. And Stochastic RSI staying up pretty high. It's got a lot of room to fall here as well. If we're looking here as far as hit pivots go here, we're coming to the end of the day here, but again, got rejected at the pivot, bounced off the S1, hitting the S2. We're kind of moving on down there. Daily, of course, again, oversold, but still a lot of room to fall here, and even more room here, which it's still only up here at about 38 on the RSI. So still a lot of potential further way for it to fall. And you'll notice large candle spreads on the way down, okay? If we had volume here, we'd probably have an expansion of volume. But these large candle spreads are, indicative of a trend usually, right? And the more overlapping sideways, smaller candle spreads are usually indicative of corrective. Of course, you usually need volume in there to really help you understand that. We don't have that right here with this. But the candle spreads there don't look very convincing at the moment as far as this just maybe being 3 down and then heading back up. So we'll see what happens there. If we're dropping here below this wave parentheses 4 here at 14,181 and 69 cents, that's your first real clue that top may be in. Other than that, I mean, you've got this channel we're in here. Let me see. Yeah. So if we get a breakdown through that channel support, that's a good clue that the top may be in as well. So, that might get you sooner than this 4 here, but you definitely got to get down below that 4 to do that. Nope, but we're going to make you famous by getting rid of you. Weekly for what, Michael? You said weekly is setting up for a possible hidden bullish divergence in RSI. Lowest weekly RSI close since May of 2020. You have to let me know which chart you're talking about there. And then we'll take a look at it, of course. See here. Oh, this one right here. Okay. Before I go another one, then we'll look right there. So there we are. Lowest weekly RSI closed right here. Yeah, and you'll notice where it's closing is this area right here. Notice how we have this push up and this pull back and then the push up. That's where it's going. So if we drop through that, that should have us coming further down. That's what's supporting us right there. On the weekly, we're finding support on the R1 pivot right now, so that is a potential positive. But again, large moves on the down there. Stoke RSI, nowhere near. And so here's the thing. Here's the other thing you need to look at, Michael. You see how every one of these other lows prior, these areas, see how Stoke RSI had jumped down into oversold first? We don't have that yet. Every other time, oversold. Right here, oversold. Here, oversold. We're here. We're only about halfway down right now. So you've got to look at that as well, I think. Yeah. But nice catch on that. Yeah, so if we're losing that, like I said, that little area right there, little notch, we should be heading on down toward oversold, I think. And if we're doing that, I think that really sets up the possibility that that tops in. Yeah. Let me see here. Let's see here. So that's that. Let me see. I've got the S&P E-minis here. We can take a look at real quick. Oh, look at that. Did it drop below? Let me see here. 45.0425. 45. Yep, it dipped just below wave B here. So we've got A, B, and then potentially 1, 2, 3, 4, 5 here for C. We've dropped down in what may be 5 waves here. I would expect this pivot to hold here. You got all this support right here and resistance right here. See all the way back over here to the 30th of November. So I would expect this. So it's just basically this candle right here, this supply block. I would expect that to hold and send it on down lower. I've got a minimum wave parentheses 3 target of 43.57 and 50 cents there on the E-minis. Yeah. Let me see here. And so then we look at the Dow Jones. And of course, you know, what makes up each one of these indices is different, you know. So they all look a little different. The Dow, which has had a huge drop off, it was the first to start down. You know, is having a little bit less of a drop here right now. But the Dow has come down already, how far? About 7% as well. So your NASDAQ composite has dropped down about 10% lower, but you know, they're both still down pretty good right there. I think the Dow Jones probably makes the most compelling case for downside here. And so right now, again, looking at potentially wave parentheses 4 up here, Roman numeral 4, may be in place. A breakdown below wave B here at 34,294 and 47 cents would kind of add confidence to that. Wave parentheses Roman numeral 5 has a target of 33,535.65 if we can get that breakdown there. Now, it's possible that wave 4 could still be in progress. Maybe this is A and this is B. We have C going up. But if I look at this, it looks like 1, 2, 3, 4, 5. Looks like you got 5 waves down. So this should just be either 3 up is done or 1, 2, 3 is up and coming, and then we'll continue lower then. If we jump over here to oil, let me see here. What do we got going on with the oil here? Come on. There it goes. So we've had this big continued move down here. I believe the top is in up there. I believe we're headed down for a bit. Potentially down to, you know, $40 or lower. So right now we're down about almost 27% off this October 25th high. And so, you know, that's just over a month. We're down almost 27%. I think right now, I think it's possible that we've got a 3 and a 4. And this could be 5, circle 5 here. But this has got me looking at it as maybe 1 of 5. So if we get a breakdown here below 65 and 54 cents, that the price signal that we are going that way. If we're dropping below wave 1 here, we definitely are headed lower down here toward minimum wave parentheses 3 right there at 57.65. So yeah, that's what I'm going to look for right there right now. If we do rally back up here before dropping below that, I don't know. If I look at this, it looks like it's a 1, 2, 3, 4, 5. But maybe it's an ABC, and maybe this is like a 1, 2, 3, 4, 5. So A, B, C. And then we got 5 up. So 4 may still be forming a flat correction there, maybe. So, we'll just continue to watch it there. Depends if it breaks out there or breaks down here. And then we'll look down toward that 57.5 kind of area. Let's see here. What else do we got? We got silver. Silver taking a beating recently. Let's see here. Yeah, so here we are kind of challenging this swing high almost. If we can get it turned down before, we've still got this wave 5 down here around 21.95 cents. This is the 1 hour. You can see we're almost topped out and overbought. We do have a bit of bullish divergence on this. So maybe it's 4 and then 5 is done right here. So 3. In that case, we'll expect wave 4 to kind of come up here toward 23.17. Basically up here around this wave 4, the lesser degree resistance area. If this is 5 done here. 5 of 3. Like I said, if it reverses prior to going above that, we'll look for that breakdown toward that area. And then we'll look for wave 4 to get up here around this wave 4 area there. Let's see here. 4-hour candle doesn't look too terrible. Looks pretty good. So again, could see that kind of happening there. Daily's prime for a move up. Yeah, I mean, if you look at this, you've got basically a 1, 2, 1, 2, 3, 4, 5, or even a 1, 2, 3, 4, 5. So you can get an ABC there or an ABC here either way prior to that swing high. So we'll wait and see if we get that breakout or not. Gold not taking quite a big move down here lately as silver has. We had that breakdown. We dipped down below this ascending channel support, though. So I'm going to put this back on there. Oh, let's see here. Yeah, so long way down from what may be wave 2 up here. But, again, this is a flat. So we're looking at this as ABC up is A, ABC down is B, even though I don't have that written in there correctly right now. And then C up here for that. But anyway, this move down here, looking like it may be a 1, 2, and then 1, 2, 3, 4, 5 maybe as an any diagonal here. 1, 2, 3, 4, 5. So this may actually be right up here, which means wave 4 is still looking around that daily pivot area, or a little bit above it here at this wave 4 resistance, which is this descending channel resistance. Remember, this was that breakout, and everybody thought, oh yeah, gold's definitely headed up now, and then it dropped back down through impulsively. So we could get a rally back up here to finish, wave 4 and wave 5 back down here. But we're looking for a breakdown below this 17.21 and 10 cents there to kind of say, okay, that top's probably in. We're heading down lower there. I don't normally look at BVol USD. I just want to pull it up here. I don't know that I've got one. I know I've looked. I know you guys have asked about that once before. No, it doesn't look like it. Let's make a copy here. Oops. I'll get this right one day. Let's see here. There it is in relation to the DXY right here. See that volatility drops as the dollar rises there. You got the drop here with the rise here. And you kind of did this sideways thing. But really, once you broke out above that and continued up higher there, that's where that really kind of broke down here. It's a little sideways right here. Breakout, breaks down right there. Let me see here. I'm interested. Let me throw the Bitcoin chart on there as well. Kind of turn some of this other stuff off. Nope, right on. Oops. God dog it. Keeping the wrong ones. There we go. I'm going to just change that to the line chart real quick. There we go. Let me see here. You'd buy this chart right here, so you'd sell Bitcoin. As this drops off, Bitcoin tends to rise, it looks like, which is what you expect, right? So volatility usually, if you think about the VIX in terms of stock market, you know, as volatility increases, it's usually selling coming in. So we do have some bullish divergence coming off here. So could kind of send it down there a bit, Ryan. This chart doesn't look exactly helpful for people that want a long Bitcoin. Because again, you got a bit of divergence here. A hidden bullish divergence right here, which gave a little bit of move down, a little bit of move up, but then it continued down lower. So what other charts are your everyday must look at charts? Yeah, DXY, the cubes, yeah, Bitcoin. Yeah, pretty much. I like watching TLT. Or you guys know I've got that TLT junk chart. Which shows you your high-grade long-term government securities versus your corporate junk bonds. Let's see here. Remember this one? Remember, if this is moving down, then what that says is people are moving out of the long-term government securities into the corporate debt, right? And that's risk on, right? They're taking more risk by getting those corporate bonds. If it's going this other way, it's risk off. And what you have is people getting out of corporate debt, getting out of those junk bonds, and getting into the longer-term government securities. And they only do that when they're fearful of what's going on in the market. Fear sends this up. Complacency or euphoria sends it down. And so we've been watching this, you know, since before it broke out. So since earlier this year, you know, we bounced quite perfectly here off this support resistance level. Pulled back after we hit the descending channel resistance there, and then broke out, pull back now to that previous area of resistance. Oops. Right here. That area right there. We actually just hit this demand block right here is where we hit. We took off. We're heading up higher again. So, yeah, this is one chart I like to watch. It tells me that the sentiment of the market in general. Let me see here. You talking about this right here, ASIM risk? Yeah, so I've got my, again, we've got TLT against Bitcoin, right? Let me get rid of this other one. So this is TLT against Bitcoin. And so as it goes up, they're moving out of TLT into Bitcoin. So out of your, it's risk on, right? For Bitcoin, it's an interesting relationship. I haven't done a lot of work on it, so I don't know just how legitimate it is. But right now, it's interesting. Again, the idea here that we're moving up means risk on for Bitcoin. So, and so like I was talking about earlier, Bitcoin and the stock market it isn't that Bitcoin is reacting to the stock market, it's that they're both reacting in their nature to the dollar, which is to say that they're both reacting to whether the market is risk on or risk off and to what degree. Again, because Bitcoin is so, it's new, people are convinced, it's going to replace the dollar and all this kind of stuff. You might have a bit more staying power here. It might turn down after stocks turn down, as people kind of hold on and hope. And then as they see the dollar continuing to rise, then your smarter, larger players will say, give up on that, and they'll start getting out more and more, which will cause the market to kind of drop, and that'll scare retail investors out, and they'll sell, and that'll send it down further. Kind of how I would be looking at that. So yeah. Still waiting for the Aussie dollar against the USD to hit a bit. I can't even say it. Hit a bit further. Yeah. I mean, we've had a lot of great forex plays in right now. Long in the dollar against whatever it's been against. Longing it against the cable. Longing it against the loonie. Shorting it against the euro. Had a lot of real good money made. Longing against the yen for a while now. It's been good stuff. Best thing, Aussie short. Telluride says FX has been the most fun the past couple of weeks. Yeah, it's been because it's been good movement, right? It's been easy. Easy's always fun. Let's see here. You were looking at Diego. You're looking at the Bitcoin 1 minute time frame. Wyckoff accumulation there. 1 minute. Spring and everything. Oh, you're looking at this right here. Yeah, I mean, if we're looking at the 1 minute here, I mean, this looks pretty good for this range here, right? So you get your preliminary support, selling climax, automatic rally, secondary test, thrust, drops down into a spring, back up, pulls back, last point of support. I mean, it would suggest it's going to continue up higher here. At least on the short time frame, right? Doesn't mean that overall it has to, this is the bottom or anything, but there's your range in green. See that volume drop off significantly in this range? And not really a spring, more of a terminal shakeout on the 1 minute here because you have the very high volume. But looking like a spring because, it does continue right back up into the range without creating any kind of range down here. So, springs come in three flavors. Basically 1, 2, and 3. And each one of them has a different when it drops, is it dropping a higher volume or lower volume or whatever, determine which spring it is. But like I said, almost looking, what's it called? A terminal shakeout-ish because of the large volume. But it does rally right back up in there. So spring, looking for that move up, boom, back down. Looking for a breakout higher here. And then we can at least locally up here, movement up a few $100s at least if we continue this going. So yeah. Looks accumulation-ish on that 1 minute time frame. But anyway, I'm going to get out of here, guys. What we're looking for is a breakout above this level here, and we should have an easy ride move back up here through this inefficiency. And then we'll look for an impulsive breakout above that 1 hour, 4 hour pivot and above that descending channel resistance. And if we can get that, that should signal that wave 2 is done, and wave 2 is done here, and we're heading up here toward that R2 pivot on the 1 hour there, all right? So there we go. I've got to get going. It is after 1 o'clock. So I hope you guys have a fantastic day. You have a fantastic week. If this is your first time coming in, man, I hope, it's done something for you. Good. You don't have to agree with me on things here, but just understand that the one thing I'm not going to do is try to sell you on anything or get you to buy something or sell something or whatever. I'm just going to tell you, hey, here's what I'm looking at with the charts. This is why I'm thinking what I am. 25 years of experience. Usually this means this, but nothing's guaranteed, right? That's why risk management is so important. I often say the only thing that you control in the market is how much you lose, right? So what does that mean? That means that the one thing that you should spend more time doing than anything else is risk management. All right? I hope you guys have a great weekend. My son is doing great. Thank you so much for asking. Like I said, guys, this is the last day to get in, or the last couple of days here to get in on our sale here, right? So, again, guys, what I do here, we do a lot more. It's this on steroids in TWC if you're tier 3. More education than you'll probably know what to do with. But the good thing about it is whether you're in with us a month or 6 months or a year or whatever, you're going to learn more in that time as long as you're out there actually learning and doing it. You're the only one responsible for what you do there, guys. I can lead you here. I can do what I can do, but I can't make you do it, right? And a lot of times people are going to come in and they're just not going to do it. They don't have that follow through, that drive. But if you do, you're going to learn a lot more here than you're going to learn out on your own or anywhere else. And you're going to do a lot shorter bit of time, which means potentially you're going to lose a lot less money, potentially make a lot more money, and just overall have a lot better enjoyment, a lot more fun trading, all right? So we'll do that, guys. I hope you guys have a great weekend. Like I said, if you happen to come back on Tuesday, I'll be here, 11 a.m. Central Standard Time. Otherwise, hopefully I'll see you guys over in Discord, all right? Take care.